Brent with Trade Therapy, and welcome back to the Trading Couch. We're talking about Iris Energy, IREN. I was part of our top-down analysis for our Clarity Spotlight last week on MicroStrategy, and IREN's really one of the cleanest examples of how Bitcoin miners lag and then they explode. When we last looked at IREN back in July, we were looking at previous crypto cycles, and we had talked about how they had a tendency to produce these giant moves, these giant markup campaigns. And we talked about how important it was to have a plan to ride the giant. What often happens is as these big breakouts occur, retail investors have a tendency to sell. We talked about having a strategy to take some profits, but also to be able to remain in the trade so that you were able to reach these higher Fibonacci levels. IREN was pushing up against this $18 level. We believed that accumulation was completing. We noted that price was up in the upper third of this multi-year accumulation structure, and the volume was very high and was compressing right here. And if we were right and institutions were finished accumulating, that we would see some sort of a controlled breakout here on volume, on strength, which is why we were talking about now is the time for you to get your plan together to ride the giant. And if we jump forward and we look at the chart from last week, you can see that this is exactly what we got. We see the controlled breakout. We see the compression right under that 18 level. We see volume coming in as price explodes up out of that range and leaving that $18 ceiling behind and using it as the foundation to push off of. We can see classic phase D behavior as all of the exponential moving averages are now sloping almost vertically here. This is the most bullish posture that we've ever seen the moving averages within IREN. So the question is, why do Bitcoin miners lag and then break out? It relates to the underlying asset that they're exposed to. So they are higher beta assets exposed to Bitcoin. As Bitcoin breaks out and neutralizes the downside risk, institutions will now start looking for higher beta exposures to that underlying asset that no longer has downside risk. And so as Bitcoin broke out and removed the downside risk, we should see capital rotating into these higher beta assets like Iris Energy because the downside of the underlying asset is gone. That's why you see these big breakouts, and that's what produces these giant price moves. We are watching these two Fibonacci retracements here as a roadmap. We see a cluster right at 68 and a cluster at 110 to 100. We are long Iris Energy and have been for quite some time. We're going to be looking for profit taking at these two levels. If we see it, we'll probably take some ourselves. But this is a classic example of higher beta exposure to an underlying asset. When that downside is removed, that's when you see the higher beta assets explode higher as institutions press into and express very aggressively their interest in higher beta exposure to those underlying assets. That's all the time we've got for Iris Energy this week. We'll see you next week.